So BlackRock recently expanded its tokenized money market fund to Solana. What does this signify about the blockchain's expansion into institutional adoption and wider trends?
We're super excited about BlackRock bringing their BUIDL product, which is one of the flagship money market funds in the industry, to Solana. Look, Solana, we've been working on partnering with institutions for quite a while now, because I think that our vision for what blockchains are is that they should be global financial infrastructure that bring all of the assets available to people around the world that have access to the internet. And so that is something that we're super excited about, because BlackRock, household name, fantastic product, and being able to make that available to the world of people who are using on-chain DeFi, I think is really exciting.
And Larry Fink has said that ETFs were stage one of this financial revolution. He believes that all financial instruments should ultimately be tokenized. What are your conversations with either BlackRock or other wealth managers and banks look like right now in terms of what products you'd like to work with them on?
Yeah, that is a view that honestly, a few years ago, I wasn't sure that institutions were really going to get on board with that view. But I think there now is consensus that the best assets want to be everywhere, and the best assets want to be able to sort of meet demand and meet buyers and meet holders where they are. And increasingly, if you look at crypto as an asset class, we've got, $3 to $4 trillion of assets on chain, and this is now a new distribution platform. And that's why I think some of the best assets from the best asset managers in the world are now looking at this as a really not just viable, but also desirable distribution platform for their assets. So it starts with a money market fund, and that's, I think, how folks kind of run the tokenization infrastructure. Once you've tokenized a money market fund, we've already seen private credit funds come online, and then that's going to open up pretty quickly into the whole world of traditional finance assets, which taken as a whole, I think something around $100 trillion of assets. Of course, there's a lot of variability in what those assets are, but now we've started to open the rails and open the ability to tokenize a whole range of different assets and make them available on chain.
Is there any sort of pent-up demand while people wait for regulation to catch up with what they're doing? So obviously we saw SAB 121 rolled back by the SEC, and so that made it possible for banks to custody cryptocurrencies. Is there an unlock in a market infrastructure bill that would potentially, speed up this process or make it possible to tokenize assets that you wouldn't be able to otherwise?
Yeah, I think the next bill that we're all going to be looking at, so certainly market structure bill, and then also stablecoin bill. So stablecoins, that actually is how most people are going to be transacting in not just the on-chain economy, in any economy, because all trades go through stablecoins and all payments go through stablecoins. So I think once there's more certainty on certainly market structure, but also on stablecoins, that's really going to open things up.
There's a lot of stablecoin activity over the Solana blockchain. Why is it a prime destination for that? And then two, you mentioned some of the legislation that's winding its way through Capitol Hill. There are two competing bills right now. There are different questions about where a lot of that regulation should go, if it's federal, if you chalk it up to the states. First, talk to me about the stablecoin market volume that you're seeing over the blockchain. And then two, let's talk about some of that active legislation that's out there.
Yeah, so stablecoins, the reason why I think they're so important is, again, all trades, all transactions ultimately come in and out of stablecoins. So if you own stablecoins, then you own the economy. That's why I think stablecoins are so important, and also certainly in this interest rate environment, they're very financially attractive, and that's kind of been a very big incentive for folks to get into stablecoins, where a few years ago they were not profitable, and so not a lot of people were interested. But now I think that those various views are coming together. So they are, I would say, RWA v0 as well, and so I think stablecoins are really top of mind for us. And why is Solana attractive for stablecoins? Well, Solana, everyone typically thinks about Solana as being very performant. Said more simply, fast and cheap. I've heard that more than once. But that's really important for financial transactions, because if you're going to be transacting, you actually want to spend your resources on the assets, sort of preserving the value of those assets. You don't want to be spending a lot of time and money just getting the assets to where you want them to be, right? So if you actually want to be able to operate a payments network, well, that payment network in terms of performance, both cost and time to transact, has got to be more or less similar to how we experience Venmo, to how we use all the various fintech apps in the world. And that's where performance is not just a metric, but performance then becomes an actual user experience. And that's why a lot of folks come to Solana.
And stablecoins are one of the verticals that you've got. You've also are working on payments, consumer apps. How do you see all of these rolling up to the main blockchain?
Yeah, I see them all being related to one another because ultimately money is a network business, and money is something that gets used for fungibly for payments, for trading, for investing, for savings. These are just all different ways to use what ultimately is just the money that you own, right? And so we sometimes talk about them as being somewhat separate verticals, but ultimately the idea is that they kind of blend together and you have this integrated on-chain economy. And so, and kind of like the lubricant for all of this is stablecoins. And that's also really important to building an economy around real-world assets on chain, because ultimately people will go in and out of different assets, which people will typically see as a savings instrument or an investment instrument. They will begin and end with stablecoins.
What do you think of the two bills that are out there right now?
I'm not. I will leave that to the policy experts.
Are you talking to the Trump team at all on their, we've seen so many different crypto initiatives, whether it's the Strategic Bitcoin Reserve, some of the other EOs. Obviously, David Sachs is now in a position where he's overseeing a lot of what we're seeing with respect to this sector. But are you having conversations with anyone related to the White House?
So certainly the executive branch, as they've been putting together various industry forums, we've been in touch, right? We've been in touch, had some conversations. Now, when it comes to some of the things that have maybe made headlines, we have not actually been involved in that. And certainly folks have chosen to use Solana for various projects that they're launching. But I'm really happy to say that's really just what the community has wanted to do.
What kind of conversations have you had? What are the questions that are coming from the executive branch?
So I think that overall, there's an interest, there's a view that crypto is innovation that America wants to be a leader in. That is a big difference from where we were 6 months ago, and certainly I would say largely over the last 4 or 5 years. So that's really encouraging to us. And I think now the conversations are really very constructive around what market structure can we put in place that is both good for consumers, good for the industry, good for innovation, and tries to responsibly support the growth of this industry in America. Recognizing that America is a good thing for America to try to be at the forefront of innovation, and this, like AI, is a huge trend, one of the most scalable trends of innovation anywhere in the world right now.
Now, you mentioned that certain projects have been stood up on Solana that you might not have advised people on. The first thing that comes to mind is a Trump meme token that was built on top of Solana. Obviously, that's had a lot of coverage around the run-up in price and then the subsequent fall. More broadly speaking, we've just seen this surge in meme coins in the last few months. It's come down from where it was. Any thoughts on what we've seen in that meme token corner of the crypto market?
Yeah, I think that with meme coins, I have a couple of thoughts on this. First is, since Bitcoin existed, there's been probably the primary use case of crypto has been speculation. Highly volatile, lots of assets being created that have a lot of price, but maybe not so much value to them, and that's itself been a spectrum. And that's something that we saw with Bitcoin in the early days, with the ICOs in 2017, 2018, with NFTs, with gaming tokens in sort of 21, 22, governance tokens, in between all of that. And then most recently, this is like the most recent wave of kind of like this, trading Beanie Babies. I don't know if you were around then, but I certainly was when people got really into Beanie Babies, and the price far exceeded the value of the underlying, right? And so this happens way back when people are doing this on tulips. So this is not a new phenomenon. It's just now happening at scale because you can with internet speed financial markets. Okay. And the other thing that I think is interesting about meme coins is the reason why people have gone to this extreme, which is to say, let's just be honest, these coins have no value, and we know they're worthless outside of their speculative value. And the reason why people have gone to that extreme is because the ability to innovate sort of in the middle of the risk spectrum has not been available for regulatory reasons. Folks who try to do things like have a token that would get a cut of protocol revenue, you would immediately get into a very dangerous area when it came to securities law and, frankly, the lack of clarity around securities law. So no one dared do any of that. And so everyone ran to the edges and said, okay, well, these things are not securities, not commodities, they're just nothing. And that's where all of the energy went. So I'm now hopeful that now that we are going to be a little bit more constructive around embracing this new financial technology, that there's going to be more ways to actually create, innovate, and make available valuable financial assets that are going to be more broadly accessible. So that's something that we've been talking a lot about. Solana's here to be infrastructure for internet capital markets. What does that really mean? It means to broaden access to financial markets, to broaden access to capital markets. And something we talk about a lot is, if you just look at the percent of, let's even just talk about the US, the percentage of the US population that is accredited investors. That means you have access to the more interesting and probably the more upside financial products. Something like 1% of the population. And if you're talking about companies that can have access to capital markets, typically by doing an IPO, well, we've seen that market also extend such that companies will be private for 10 years and then will go through a very expensive filing process where a lot of the upside is then taken by the underwriters, the institutions. By the time it becomes retail accessible, a lot of the upside has already been absorbed by private or institutional markets. So I think there's a broader kind of idea here around enabling broader access to capital markets. And that's something that that's been our view for, I think, really this industry's view from the very beginning, something we're really excited about, and that's something that's really a priority for us. So when you see the partnerships that we have with various institutions, that's, I would say, the very beginning of it, but really where we're going is trying to broaden capital markets access and building internet capital markets.
And what does that look like in the next 6 to 12 months? What kind of product launches, what might we anticipate seeing?
Maybe we can talk about that in the future. So we've got a couple of things that we're working on right now, but I think we're not quite ready to talk about that publicly.
So you're based in Switzerland, and there was a warning today from Google Cloud about North Korean attackers targeting Solana projects in Europe. How's the foundation going about protecting those who are building on top of Solana?
Yeah, so we've invested over years in partnerships with, for example, chain monitoring technologies. I was just at the Chainalysis event earlier today, and these one of the parts about being like a more mature ecosystem like Solana is that a lot of these chain monitoring compliance tools are available at scale for the full range of economic activity that happens on Solana, right? So there's that's certainly one sector of the industry that we take very seriously, and with Chainalysis, for example, they added support real-time able to monitor all coins on Solana. So there's a lot of very robust third-party infrastructure like that which is available. But as an industry, I think as we saw with the Bybit hack, these are really sophisticated and very committed adversaries. And as an industry, we try to keep up and be prepared with what the latest tactics might be, and be defensive against that.
So here in the U.S., having the most pro-crypto Congress ever, obviously a White House that is very supportive of the industry as well. What are you seeing in terms of changes in what builders are looking to create? I mean, certainly we're seeing this push to onshore activities, so people who previously were trying to steer clear of the U.S. now looking to set up shop. But are you seeing that show up in project ambitions or what people are looking to build more broadly? Yeah,
so I think there is interest in building certainly RWAs and tokenizing products, bringing those on chain, and also building out more interesting sort of crypto-specific structured products, stablecoins as we talked about earlier, and also sort of more expression of interest in building these sort of on-chain tokens that might represent, for example, revenue from a protocol. That's actually a very sensible thing to do. That's like a really that's, I think, absolutely a token business model that should exist. But people were, and probably one of the most obvious ones, but people were concerned about doing it because it would get them into a potentially sort of endless and uncertain regulatory land of securities law previously. And now hopefully there's going to be a more productive path forward for that.